Bitcoin represents the most certain thing in the financial universe, right? And Archimedes said, give me a lever long enough and a place to stand, I can move the world. Okay? Bitcoin is the place to stand. I'm not trying to change Bitcoin at all. I'm just standing on it. The question is, what am I doing? I'm trying to digitally transform the capital markets. The world that I'm changing is traditional finance world. And here's my observation.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Michael Saylor, a visionary in digital finance, explains Bitcoin's crucial role in capital preservation and forecasts revolutionary trends for our financial future. Tune in now to learn more.
Equity capital markets, for the most part, value companies based upon a promise and expectation of future cash flows, which another way to say it is the companies have no money, but they promise to get some money over the next 20 years, and we estimate how much they're going to get, and that's the value of the equity. Our company's position is we actually have the money, right? So we have the money now. Maybe you can value us at a premium, but right now the company is 65% or 60% of the market cap of the company is the money. Whereas if you look at a typical company like Apple or Microsoft, 5% of the company is money and 95% is just expectation that they might get money in the future. Why is that? That's because money is toxic if you're using bonds, treasury bills as a capital asset. So if the money that corporations hold is toxic, if it generates a 3% after-tax return, and if the cost of capital is 13%, then you destroy 10% of your capital a year. That means that every conventional company is capitalized on toxic money. And so my mission is to capitalize companies on virtuous, clean money, right? And if you look at the fixed income markets, this is even more profound. Think about this for a second, Christine. A corporation borrows money because it needs money, and so I borrow $1 billion, but I don't have $1 billion. That's why I borrowed the $1 billion. And my credit rating is based upon my cash flows or my EBITDA. So the credit rating agency says, well, you don't have the $1 billion, but you have $100 million in cash flow. And so over the next decade, maybe you'll get the $1 billion. So I'll give you a credit rating. So your credit rating is based on the money that you expect to get to pay back the bond.
Bitcoin and Ethereum are predicted to close the first quarter of 2025 in the red, with a vertical swing up appearing unlikely, according to analyst Pav Hundal. The two leading cryptocurrencies have struggled amid unexpected macroeconomic challenges and regulatory uncertainties. Ethereum has experienced a severe decline of nearly 38%, marking its worst Q1 performance since 2018, while Bitcoin has also dipped, facing its most challenging first quarter since 2020. Market sentiment remains cautious as investors await clearer signals from economic data and policy decisions. Some experts believe that once global conditions stabilize, Bitcoin may find the momentum to rally, though immediate recovery seems doubtful. The current downturn reflects a broader trend across the crypto market, with overall capitalization falling significantly since January. These developments highlight the volatile nature of digital assets in times of economic turbulence, leaving investors to navigate uncertain waters in the near future. Chances look slim.
We're in the market with $10 billion say we have $45 billion of actual money, and we want to borrow $1 billion. And a credit rating agency would say, well, you don't have any cash flows, so we don't know if we can give you a credit rating. And of course, the joke is, well, we actually have the money. We have $45 billion. We want to borrow $1 billion. Or I have $5 billion in collateral. I want to borrow $1 billion more. I'm 5x over collateralized. You could literally give me a credit rating based upon the money I have, But the entire fixed income market, which is $300 trillion of corporate bonds, preferred stocks, structured instruments, and the like, that entire credit market is based upon credit ratings and the theory of credit that's based upon loaning to companies that don't have any money to pay it back, but they promise that they'll get the money in the future. So my company is issuing bonds and issuing preferred stock that's backed by Bitcoin, and our mission is to create a new theory of credit, right? We want to issue billions, then tens of billions, then hundreds of billions, then trillions of dollars worth of credit instruments that are backed by real money. And that's what we're doing right now. We're the largest convertible bond issuer in the world last year. I would like to be the largest convertible bond issuer this year. And those convertible bonds are the highest performing, most sought after bonds in the world because they're backed by Bitcoin, by real money. You know, other people that issue convertible bonds don't have any money. They're actually just backed by future expectations of getting some money. And we just issued this convertible preferred stock called Strike, STRK. That's the first convertible preferred instrument ever backed by Bitcoin or any crypto asset, and that's the best performing one as well. And then we announced a $21 billion shelf registration. That's the first time anybody in the history of the capital markets has ever attached a shelf registration to a preferred stock. Okay, so what are we going to do? We're going to sell billions of dollars of preferred stock to a market, and it's going to be twice as good or 3 times as good as the existing preferred. So preferred stock investors get a benefit, and then we're going to buy Bitcoin, and our common stock shareholders are going to get a benefit, and the Bitcoin network is going to grow, and the entire crypto economy is going to grow. And so the long-term plan is just securitize the entire market. And last year we raised about $22 billion of capital. If we can raise $22 billion, then $40 billion, then $80 billion, then $160 billion, then $320 billion, we'll just keep raising more capital. And you would say, well, when is it going to end? Well, when we've got 1% of the fixed income market, that's going to be $3 trillion.
Bitcoin is showing promising signs of a bright future as new highs in 2025 appear likely. A decade of Bitcoin price data reveals that there is a 75% chance of Bitcoin reaching record levels in the next 9 months. Bitcoin network economist Timothy Peterson remains optimistic about the digital asset's potential. In a recent post, Peterson pointed out that Bitcoin is currently trading near the lower bound of its historical range, suggesting that the coin is well positioned for an upward rally. He even noted there is a 50% chance for Bitcoin to gain more than 50% in the short term. This forecast comes on the heels of studies that have identified April and October as the most bullish months for Bitcoin, with average gains of nearly 13% and 22%, respectively, over the past decade. Market observers believe that these seasonal trends combined with current market conditions could drive Bitcoin to new all-time highs. On-chain analysis also supports this bullish outlook. An anonymous analyst on CryptoQuant mentioned that short-term whales have a realized cost basis around $91,000, while many highly active addresses hold Bitcoin between $84,000 and $85,000. A dip below these levels could trigger selling, marking these price points as critical liquidity zones, where market psychology may shift. Monitoring these decision zones will be essential for traders and investors as they gauge trend strength and anticipate potential reversals in the market. These promising insights underline Bitcoin's appeal and resilience. Investors remain watchful as market dynamics evolve, understanding that while past trends are encouraging, volatility remains inherent in the digital asset landscape. Optimism and caution blend in the current climate. And do not forget to subscribe to Bitcoin Saylor. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you liked the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.